All right, welcome everyone. We're starting right on time today. That's awesome. Welcome to the second AI Circle of 2024. Hope you guys have had a good last couple weeks. There's been a lot of things going on. I know in our software over the last week or so. So a lot of exciting things to get into. And the reason you guys are all here, I'd like to introduce Mr. Kelly Korshak. Kelly, how are we doing today?
We're hanging in there, Lee. Having a good day. How is everyone?
Good. For some reason, you're a black screen on my end. I hope that's not the case for everyone else.
And I hope not. I'm noticing I'm frozen when I look at myself side of this. Don't let
We'll
me
give it a second.
turn the camera in and re-enabling it.
I can hear you just fine. Why don't you guys in the chat, just let me know. Maybe it's just on my end. I don't think it is, but you never know. If you guys could see Kelly, just let me know.
Yeah, please, because I can't see myself. Someone messaged for just display there. All right.
We'll get it sorted out. While we're trying to figure that out, it says he was frozen. That's kind of what I figured. Maybe more out of curiosity, I know we've been doing these AI circles live on YouTube for just under 2 years now. But I've also seen lately in the last couple of months, we've had a lot of new folks joining us. So if you're new, just say hi, welcome, tell us where you're from. And if you've been watching us for the last few years, also say hi and maybe just tell us the year that you started joining us for these and what you've learned so far for the new folks.
Is that
still not going? We could also we could just get in a second. I'll just allow you to share screen. You can go through charts and things like that. And I guess we'll be faceless today. First things first, I'm just going to go over quickly the agenda. So for those of you that are new, that really don't know what this is about, and we got this question a couple times a few weeks ago. What we spend this half hour doing, and this is presented by the folks at iFlip, which is the company that Kelly and I are a part of, or I guess a lot of other people as well. So first we do a market update. Kelly kind of gives his take on the market, shows you where certain things are, how things have been going lately, and maybe even get into a prediction or two. You never know. Next, we'll get into what the AI has done recently. So if you guys aren't familiar, what we provide is an AI platform for you guys to invest in the markets in a very automated way. The third part of this is Q&A. So this is your guys' chance to ask questions to either Kelly or I. We'll get you all the questions, get all your questions answered. And then at the end, we have this giveaway. And if you're new, you didn't probably know this yet, but at the end of every show, we give away a $25 Amazon gift card to the person that asks the best question. So I will actually skip through the disclaimer for now. And this is kind of how you qualify. So if you're an iFlip user, if you're using a Smartfolio, all you have to do is either email or text us one of these methods below, and I'll also put it up on the screen at the end so you guys can know how to claim your winnings. But we will get that gift card out to you guys, and you can use it. It's pretty much as good as cash, as Aaron would like to say. So with all that being said, before we get into anything about the markets, we do have to go over the fun disclosure or disclaimer. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk, and you should speak with your CPA or financial representative to ensure that iFlip Smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. And with that being said, I'm seeing the comments fill up. This is awesome. We got some folks from Northern California, people as far as Florida. I'm also in California. If you guys didn't know, I'm in the Sacramento area, and Kelly is in Arizona. So both not too bad of places to be this time of year, although I probably look like I'm wearing a snow jacket. That's beside the point, though. Kelly, you want to share a screen and start going into the different graphs and things you want to show?
Yep, I think you should be able to see my screen as it is.
Yep. Sorry, guys, about the the
Let's
cameras.
Yeah, by the way, everybody, it could be a bandwidth issue. I've never had the opportunity not to show my face when I do these. I am always here for a view. By the way, I want to reach out. I see that a person named Hala is there. I believe I've met you before in Nevada. Let me know if that's the case. And let's get to it. Again, excuse me. I actually have a suit jacket on today. So there is my newest effort for
Maybe
making.
that's why I didn't show your face.
And,
You're looking too good, Kelly.
that's why maybe I just burned the camera. All right. So look, let's just kind of get to it. What we normally do here is talk about what our machine learning product does, how it does it. It automates the investments in the market. And also I give an overview is a take on the market itself and the risks that might be existing or not, whether we have clear sailing or not. Things like this is what we'll talk about, and I'll do some question answering. I'm sure that'll occur after I go through it. So let's just look at the chart. If everybody can see it, it'll be a little blurry, but it basically gives you an idea of the movement of the Dow Jones Industrial Average since COVID. This area here on the screen that I'm highlighting, this was the COVID fall from the market back in February, March of 2020. And we had this 33% move that actually occurred literally in a half a month. After that move, the market, of course, had a huge explosion. I think we all know this. This is old, but it's worth noting to these highs here. Now, these highs here essentially are January of 2022. January of 2022. So I think everybody should keep in reference that 2 years later, the market has moved up a mere 3%. So we went through these huge runs where the market was down 20% in 2022. It was up in 2023, as we all know now, 24%. And in this year, we're having a little 2.5% rally on the year on the Dow. And what it really is saying is that, folks, as good as the market appears and all the money that's come into it over these last 2 months, because if we zoom out, let's look at the money that has come into the market since the end of October. This is all November and December. And this little couple of these days here are January of 2024. The market is only up over the last 2 years, 2.5% for the Dow. If we look at the S&P 500, here we go. We'll do the same thing. Guess what? The S&P 500 over the last same period of time, January of 2022, is up a mere 1.5%. But look what the roller coaster was between that time. A huge down move, a huge up move. And by the way, that up move was only really exemplified over the last 2 months of last year, only to be up over 2 years, a mere 2.5%. So right now, I think most of us are in the belief is, wow, this stock market just can't seem to go down. But in perspective, and you must look at things with perspective, it really has gone nowhere. And if you could make a case that the market may be overbought here. That being said, these are things that I think people should be aware of. Now, I read a statistic the other day that another thing that is noteworthy in all of our conversations is if the Magnificent Seven, these 7 tech stocks, didn't perform and go up almost 100%, if I collectively look at the tech Magnificent Seven stocks, they have all practically doubled. Some are up only 40%, but that's in contrast to ones that are up 200% in 2023. But if you look at the total value of the Magnificent Seven, those 7 stocks carried the entire market last year, and they are continuing to hold and carry that. Here's another interesting statistic to throw out. The Magnificent Seven collectively their market cap represents over 4,000 of the Wilshire 5,000 best companies in America. Think of that. They are literally 80% of the value of the market. If the Magnificent Seven went nowhere last year, the market would be down last year. So we must keep the perspective that these 7 stocks are holding up the entire market. What does that mean? It means really very little. I wish you could see my face because it would exemplify what very little means. 7 stocks holding up a market is telling you the dynamics of how the world is changing. The market is no longer a collection of investors making daily choices. It is really a conglomeration of mutual funds and ETFs that are making collective decisions based on mathematics. There is no longer board meetings talking about the overall value of the market and how we should be invested. Yes, that occurs inside some investment advisory companies like the Ken Fishers of the world, where they make investment decisions for their clients. But all they do is they buy their clients their stocks for the year, and they, of course, hope that the stock market goes up. They always say the market will go up, but that's not always the case. And they're just betting on the fact that 85% of the time it does. And so that's a good bet, and I don't blame them. But we have a mathematical approach, and we think that's better in the long run. Now, most of you out there might have noticed that yesterday and the day before, there was a huge set of order buying using the algorithmic machine learning component of our product. Why? Why did that all occur just now, January 22, 23, and maybe a little bit today? And I think another interesting point is there was this huge buying in a swath of well-known stocks that we all know. And some of these stocks are everything from Apple and Amazon, Boeing, even Bank of America, Hess Management. Oh my gosh, the list is huge. Netflix, Merck. I'm glad we bought Netflix yesterday. I thought it was up $50 today. Oxy Petroleum, just name it. Even the Triple Q was bought, which is an index. The only thing that wasn't bought was the S&P 500 index itself, which means there's still going to be a small component, maybe 20 or 30% of money that's still going to be in cash, waiting to buy the S&P 500 spider, which is the proxy for the market itself. Remember, the spider is the way we're able to maneuver within the market quickly and effectively, putting cash to work or taking it off, thus reducing risk. So that was an interesting thing that all the stocks went in, but not the S&P. Why is that? And actually, Lee asked me the question himself right before this, our AI circle today. And the answer is that the S&P spider is a ETF that represents the market itself. It is a collection of the 500 stocks. Inside of large collections, the volatility is hopefully reduced to be less than the volatility of the individual stocks inside of it. It is the ultimate diversification tool. The reason it wasn't bought is because indices generally have the behavior of reversion to the mean. So if the S&P 500 is right now too far away from its mean, in other words, its average, then it will not allow the purchase. However, at the end of the day, at some point in the future, expect to see that as well. So that's something to note. The stocks we're in are, as you can see in the collection, if you have any Smartfolio, the balanced or even the aggressive, you'll see that we now own practically everything. That is a very rare circumstance. So now what happened? What happened in the algorithmic and or machine learning component that made this occur? That's obviously should be a question that all of us have, including myself, because at the end of the day, remember, I'm not the artificial intelligence. I'm quoting with my fingers right now since you can't see me. That I'm not the artificial intelligent. I'm not the person that the machine learned from, although we do have something called subjective machine learning. What did happen is this: all of the data that represents the things that are negative, things like credit card debt, which was a huge reason why we weren't in last year, none of those things have abated. It's actually higher. National debt is also higher. These things are just negative things that are that represent the wall of worry that the stock market generally climbs in. What did happen is that collectively, a lot of the stocks internally that are within these portfolios actually generated simultaneous buy signals because the machine learning component allowed them to come out from under their cloud of the machine saying, yes, all this data is bad, but guess what? This other data now collectively is better. And it bought the market. And it bought all the market and all the symbols that are in the balanced and or aggressive portfolio. However, I can say another thing is the reason why the S&P didn't go long as well is because it's being held back by the reversion component that is inside the algorithms itself. So remember, our machine learning is a component of two things. One, a machine that is looking at the overall market and has found its best path to navigate the overall market and its volatility may keep the S&P out. However, it is now open to buy the S&P, but there is another thing inside the S&P algorithm that said don't buy, and that's that reversion component. So right now, the machine says we're okay to be long the S&P 500. However, the algorithmic portion, which is a very good indicator, is saying no, not quite yet. Let's wait a little bit longer and see if we can get a pullback that we can buy it in. So that is the reason why the S&P still isn't long. It's waiting on the algorithmic component to loosen so it can buy as well. Now, let's talk about one more thing before we get into some Q&A, because time does go by quickly. And that is that this is an election year. Election years are generally positive for the market. Let's keep that in mind. How we close at the end of January is also something called the January effect. We've talked about this before. Generally, up Januaries generally mean an up year. That doesn't mean they may have a lot of problems during the year, but it is a good, steady, reliable indicator that generally 80% of the time, 80, not 85, 80% of the time you have an up January, you do have an up year. So let's keep that all in the back of our mind. Last year was a challenge to that. We had an up January, but then again, we had a terrible year in the last 2 months, edged it out. So let's go and look at a few other things so we move away. Let's keep an eye on things that are worrisome to see what we should keep that might uprail our buy decision. Here is the bond market. This represents the 10-year note. As prices go down, as you can see over here, interest rates are going up. Well, obviously, the rally we had last year in the stock market was followed by lower interest rates where the Fed, where people, institutions believe, hey, the Fed's going to cut next year. So they bought the bonds in anticipation of it. Well, that's the case. The bond yield went from 5% all the way down to 3.85. Right now, we're almost on our lows since the high, and that is now pointing at a 4.15% yield on the 10-year note. So if this note decays further, we will get our pullback in the S&P. And that's fine. We can get the rest of our product long. The question is, where will interest rates go? So far, we've seen no Fed cuts. We should find out in February. And we're going to pay really close attention to that. And the good news is the machine also does that. Let's look at the dollar. Same kind of thing. Here is the dollar index, which means how good is the dollar doing against foreign currencies? Well, the dollar did very well. Guess what? All the way up until the end of October, it was strong, and then it weakened. And of course, the stock market rallied. Basically, a weaker dollar is good for the stock market. Why? It attracts more foreign investors, more foreign money. It becomes cheaper for foreigners to take their currency, buy cheaper dollars, and then reinvest them in America. That's why this occurs. Notice, however, that the U.S. dollar has weakened just recently in 2024. So the dollar is now getting a little stronger. The dollar is a little stronger, and that doesn't portend well for the stock market. But the stock market is eternally optimistic, and it has a huge lag. It really needs convincing to go down. So finally, something else I think, let's look at the Warren Buffett indicator. Warren Buffett indicator is basically this. It's the Wilshire 5000. It's the price of it. The price over here of the Wilshire 5000 right now, if you see it, it's about 49,000 K, which basically means $49 trillion. In other words, Warren Buffett had an idea that, hey, if we add up the value or market cap of all the stocks in America, the Wilshire 5000, and we divide that by the GDP of the country, which is about 32 trillion, we have a spread. Warren Buffett believed, and this is his thought, that basically you want to always buy that at a fair value. In other words, if the Wilshire 5000 was also 32 trillion and the GDP of the country was 32 trillion, it would be 1. That's a value. Anything over 1 means it becomes less valuable. In other words, the market is rich. Right now, we're at a historically high level. So a Warren Buffett would be very nervous of the market. And if you read little excerpts of him recently, he is nervous of the market. He feels it's overpriced currently. But you know what? The markets have a way of surprising everyone. And that's why it's better to let a machine try to manage it in a better way than human beings, because a lot of human beings, including myself, would have a lot of difficulty buying the market right here. So sorry about the phone. Finally, I think it's always worthwhile to look at Bitcoin. Now, I think everybody knows I'm kind of a fan of this. There's people out there that I know are not. But if we look at cryptocurrencies, I've been doing some work on this. We all know that Bitcoin was up, well, we could do the quick math. It was at 26,000 for most of last year, this area down here, and now went all the way up to, where was it, 45,000. So we're basically up about 90%, 85, 90% for the year. Huge move. Other cryptocurrencies did not enjoy the rally that Bitcoin did. Bitcoin has recently retraced. It's following Fibonacci numbers, if anybody knows what they are. They're basically a calculation made by Leonardo da Vinci that believe that things always work in proportions. And there's all kinds of evidence to this. I look at it, it's not snake oil, but it is something to understand and pay attention to, because traders pay attention to it. And this very much is a trader's market. We are now looking at of the first correction we've seen in Bitcoin for a while. It's moved all the way from trying to approach 50,000, and it's moved all the way down here to about 38,900 area. A 50% retracement from the moves down here to the low is a price of around 38,000. If we move to 38,000, that might be a support level. This is for traders. And again, I'm not making recommendations, but if I was a trader, I would be looking at this as an entry point. And so when the Bitcoin ETF finally comes out from Blackstone, there will be those people that are interested in it. And I would recommend that people take a really hard look at Bitcoin, and maybe it should be a small portion of every portfolio. So I'm a believer in that as the decorrelated product. It doesn't behave like anything else, and that's exactly what you need to be able to manage volatility inside a portfolio. Well, I've talked already for about 20 minutes, Lee.
Yeah.
Probably some questions, and we'll go over a little bit to answer them. And there's the basic market update.
Yeah, so let's stay on Bitcoin for a second. Rajesh asked if we can invest in Bitcoin in iFlip. You've talked previously about adding the BlackRock Bitcoin ETF into some portfolios. But I've also heard from other people recently that there's something called the IBIT, which I believe is like the iShares Bitcoin Trust. Maybe just talk about that for a second, about how you're thinking of adding it in there, what it means for the average person, and then I guess take that for what it's worth.
Okay. Well, first of all, there's already proxies for Bitcoin. There have been for years. One of them is the Global Bitcoin Trust. So that's GBTC, like George, Boy, Thomas, Charlie. There's proxies for it. The problem with those ETFs, there's a good thing and a bad thing. First of all, the bad thing is two things. We'll put it like that for this and the newer product, the iBit. Here's the issue. One, they're buying the Bitcoins themselves on various exchanges like Coinbase. Coinbase has huge charges to be able to buy these things. So in other words, you are paying, even these large institutions are paying between 1/4% and 0.5% to just buy it for their clients, which means that the exchanges themselves do very, very well. And however, that's a cost that we have to bear when we buy it. Second of all, they have a load. So like Global Bitcoin Trust, I'm not familiar with the iBit as much, is charging 2% a year. So basically, if I bought Bitcoin for 100 and it stayed at 100 all year, I would only have 98 because they charged me 2%. I don't like that, but if you hold it short term, you can live with those things because again, the 2% is annual, and if I hold it for a week, it's 1 divided by 52 times 2%. So that's much smaller. The final thing, though, is that you must look closely at the way those ETFs are designed. They're often designed to say that the total value of all the Bitcoin that they own doesn't represent the amount of money that has been deposited into the ETF. Why is that? It is part of the cost structure of it. And so when you look at the prices of like the Global Bitcoin Trust against Bitcoin, you will see that there is a discrepancy that is beyond the 2% fee. And that discrepancy is kind of a good thing if you want to trade an arbitrage against it, but it's a bad thing if I'm buying and holding. If something ever happens, I will not get all my money out. That is why when BlackRock offers the product, it's going to change. It's a game changer. And the reason so is because BlackRock will essentially get rid of most of these exchanges. They will make it cheap to buy and sell it. That is why the SEC has approved it. They don't know how to manage it, so they're going to rely on the biggest investment institution in the country. BlackRock has $17 trillion after all. They know more than the regulators. So they will set the guidelines. Once that's the case, we will be able to effectively trade Bitcoin in a cheaper way and a regulated way. And therefore, Flip will, of course, offer that product. And then people will be free to buy and sell it as they please. But I highly recommend they lean away from the old indices like GBTC or the iBit that was mentioned and stick with the new BlackRock product because we at least know it's efficient.
Definitely. And the IBIT, it looks like it's a very new product. It went to market on the 11th of this year, and I just looked at a graph of it. And just like Bitcoin, it's been a little bit down since then, but it's definitely cool to see all these different, or I'll call them new things, come to market and be available for the everyday investor, which is awesome. I'm going to transition from Bitcoin and get back to it in a second. The next question is from Sherry. Probably going to be a quick one, Kelly. She said, newbie here, what are the Magnificent Seven companies? And just for everyone else who maybe missed the start of this, Kelly was saying how the Magnificent Seven really have, quite frankly, last year held up the market on their own. So Kelly, go ahead.
Here they are. First of all, I can label them. Can you see my screen?
I'll turn it back on. Sorry about that.
Turn the screen on. It's Apple, Amazon, Google, Meta, Microsoft, Netflix, NVIDIA. There they are. And I keep a very close eye. And if we click any one of them, like Apple, almost on its high. Amazon, on its high. Google, on its high. Meta, on its high. Microsoft, on its high. Netflix, really on its high. NVIDIA, really on its high. So those are the Magnificent Seven. The market has been held up by these stocks, as you can see, because if I go back to for example, the beginning of 2023, for example, NVIDIA was 147, and today it is 615. So it's very hard to buy a stock that's gone up 400%. As good as it looks, I don't want to be the investor personally here. I would, of course, prefer anywhere else around here, but you have to first find stabilization before you buy it. So you can't chase stocks like these as much as you sometimes want to. If you do, these are things that if they go up that fast, will they go down? No, but I can tell you, it's very possible that this thing could retrace 50%. That makes this stock from 615 a 300 and something dollar stock, and it's still a buy. I wish you, again, I'm so sad that the video isn't here today. So those are the Magnificent Seven. And as you can see, when you have stocks that are going up 400% in a year, that's why these stocks have held up the market. It's almost, by the way, this is all unprecedented. There's never been a case like this ever. Perhaps this existed when the markets first started being created by the Dow Jones, when we had the first industrial companies join in, like the General Motors or the General Electrics, where those were the darlings at that time. Today, it's these stocks.
Awesome. And just to add one little thing, I guess this was more of an acronym, but you might have heard of FANG stocks before. That's the Magnificent Seven, is some of those in a couple editions as well.
Correct. The FANG stocks are now the Mang stocks. The F was the Facebook, which
right.
is Meta. Really the same thing. So the FANG stocks are really, it's a new acronym, would be the Magnificent Seven. They just added another two stocks that have gone up immensely. And that's why they're talking about them all the time. And the one thing all seven of those stocks have basically in common, maybe with the exception of Netflix, is AI. Right? I mean, the real leaders in the machine learning, artificial intelligence area are those companies. Those are the companies that have the capital to do it and to advance the ideas of machines and learning from them so that they can help people. With this, though, I think there is some downside to it. We won't see it yet because we're all so excited to see how the world is changing. I'll add one more thing, even though we're over time. It's very important to note. I remember in 2000 when the NASDAQ was flying high. Remember 2000, any of you? But I remember one of the peaks was this. At one time, it was late 1999, they had mapped for the first time the human genome. And the human genome consists of literally 1 billion data points. And at that time, computer technology couldn't really manage all of that very well because of just the way the files were designed. We were on 16-bit processors and not 32-bit processors. So the way we stored data didn't allow, we had to aggregate them together in segments. It was very difficult, but they did it with a Cray computer. Now, so at that time, everybody believed, oh my gosh, we're going to solve cancer. The world is changing, just like we feel it is today in AI. Unfortunately, if anybody remembers the early 2000s, that was followed. All that good news was followed by an 85% correction in the NASDAQ. So again, folks, it's important to be involved in these things, but at the same time, if you are, and we are, you must remain at some level nimble, because these are things that can have serious corrections and they can have huge impact on a portfolio that is too myopic with them. That's why we believe to invest a little broader, not so much to diversify within 500 stocks. If we want to do that, we just buy the spider. But if we are going to have a smaller diversification set that represents our portfolio, then we have to know that we have to periodically move into cash. sell them and rebuy them cheaper if we can. That is the idea of a core concept of what we do at iFlip.
Awesome. I'll take this next one again from Rajesh. Said, I'm trading here using my 401k with IRA Club. I want to invest from my personal savings too, so I need to create another account. And that is correct. So I'm going to turn your screen off, Kelly. Yeah, so you can use IRA money, whether it's from IRA Club or elsewhere. You can also set up a personal account, which is they're both liquid, I guess, but obviously you don't want to be taking money out of your IRA, putting it back in a bank account or anything like that. So for liquidity purposes, it's also nice to have a personal account too, and a lot of people do have both. Next question from Jim back on on Bitcoin and GBTC. Is there anything wrong with adding GBTC to a custom smartfolio? Kelly, I'll let you chime in on this, but first, just want to let you know, Jim, GBTC is an OTC stock. Right now, we can't buy it through Velox, but we're working on that with them. So even if you were to add it to your custom smartfolio, it's not going to buy anything right now. But Kelly, what would your take be based on what you just said about not every Bitcoin ETF, I guess, is created equally?
They're not. However, I will say that I don't know if that's really so much a custom portfolio product or it is really just a piece of a core product to own a piece of that inside of a portfolio. I am a firm believer that some exposure to Bitcoin doesn't matter what the vehicle is. The best vehicle is the one I discussed earlier, the Blackstone product. That will definitely be the best product. It may destroy the value of all the other ones out there, because why would I buy GBTC and pay 2% to own it when I can have another ETF that charges me maybe 1/10 of 1% to own it? Obviously, I'm going to take that. So the issue with Global Bitcoin Trust, or the IBIT, is just that. There is nothing wrong with owning them. I believe a person should own some. That's my personal opinion. I believe that it is the new gold. If you can see me, that is so disappointing in our video today. I'm quoting using two hands, two fingers. I'm making a quote. It is the new gold. It is the new decorrelator. So no, nothing wrong at all. Bitcoin through GBTC, it is an OTC product. That's one of the reasons we don't allow it anymore. But that is it's not like we don't want to. It's because the clearing firm doesn't like it. Also, the clearing firms are waiting now again for the Blackstone product.
Awesome. So would it be fair, Kelly, to say that even despite the challenges that maybe a GBTC or an IBIT have, you're still bullish enough on crypto itself to warrant still investing into it?
Again, we're not advisors. We can't give opinions, but that is my opinion. Yes, I would be buying Bitcoin. I have actually some right in this area, the 38, 39,000. If it breaks that, I'm willing to actually buy more. So it's kind of safe when you know you're going to buy more.
Right.
By the way, good quick strategy for anybody: when you do buy something like this, never put on your whole position at first. Put on it just maybe half of it. I do it in thirds, and I'm willing to buy it at a higher price. But I really want to know that I'm buying it in a place where I know I can buy more if the price goes against me. So again, don't say I'm own it and then walk away and say, here it is. Let's see what happens in a couple of years. I'm not that guy. I'm the person that wants to do it collectively over at least a week or so. That way I get a price for an area, not a price.
Definitely. One more from Rajesh. Is it BKRP? I think he's asking about the BlackRock product. I just did a Google or a little search on the symbol. It looks to be something different. It says BlackRock Petroleum. So my guess would be no there. Jack asks about Bitcoin. BlackRock is iShares IBIT Bitcoin ETF, right? I don't think so. Kelly, have they made a symbol for it yet?
My understanding is the symbol isn't been decided yet.
Yeah.
And that's my understanding. Now that could change. That could have changed today. Could have changed 3 days ago. But again, all that's happened right now is that the SEC has cleared it for them to build it. So we don't even know what the exact construction of this thing is. And by the way, that's really important. The one thing you can bet is, though, the construction will be fair and honest. For whatever you think of BlackRock, everybody, good or bad. In many ways, I don't really like BlackRock, but that doesn't mean that they don't know how to create a great product. So I'm a person that will actually look at the construction of that ETF, like I did for the GBTC. Why? Because I'm looking to arbit, which is mean, hey, I can trade it against something else if I know the core components of it. And that I don't even know what those core component and the ratios it'll be. In other words, will one Bitcoin represent how much of the $1 that I put in? That I don't know yet. So that I need to know before I buy it. But I can tell you this, it'll be a safe bet because they're not going to be egregious.
Got it. And with that being said, we're a lot over time, but I think it was a great conversation. Feel free, if you have any last second questions, put them in the chat. I'm just going to bring up the how you win this Amazon giveaway. So Kelly, I'm going to have you pick a winner again. Feel free to look through the chat, see what your favorite question was. So again, we're giving away is $25 Amazon gift card. It's going to the person that asked the best question, which I know is a bit subjective, but you ask enough good ones, you'll get picked once, I'm sure. Again, the qualifications, you need to be using an iFlip Smartfolio, and then how you actually claim this whenever we announce the winner here pretty soon. You can either email us at mailbag@iflipinvest.com or text that number 480-418-0575, and either just give us your account number or send us a screenshot of your account that shows you're in a Smartfolio, and we will take care of the rest for you. I'm not seeing any other questions. I know they take a second to get to me, so I'll be patient. But Kelly, did any question jump out to you?
I think the one I have to accept is, is there anything wrong with adding the GBTC? Even though we can't add it right now, the question in its core value is correct. Is there anything wrong with it? No. It's sort of like, should I add gold to my portfolio? Gold has been part of many portfolios for over 50 years. People own Krugerrands. People put them in, they own little gold ingots that they put in their bank. That is an investment. That's an investment, and that's part of a portfolio. We have a house. Hopefully, we might own a few gold ingots. We might have stocks. We might have bonds. But why not Bitcoin? So even though there's a lot of naysayers of very influential people like Gary Gensler or obviously Jamie Dimon, they hate the product. There's many of people that hate it. I was one of those people, but you know what? That's the right question because there's nothing wrong with it. But I caution, that should not represent much more than 5% max of any portfolio. Unless you're a trader of this is a home run at some level, but it's also a decorrelator. It's something to go against the way the rest of the market behaves. So therefore, I think that's a good question.
Awesome.
And so I think that should be the winner today for me.
Perfect. Well, Jim, you're our winner tonight. Congratulations, and thanks for hopping on. And thank you, everyone else, for hopping on as well. Maybe you'll be our winner next week. And just to show the ways to claim your reward again, you can either text this number at the bottom here, again, 480-418-0575, or email us at mailbag@iflipinvest.com. We'll just double check the chat, make sure we didn't miss anything.
I want to reach out and say thank you to Rajesh for your questions.
Yeah.
And Hala again. Feel free to reach out to any of us. Assuming you're the same Hala I met. Yeah. And that's it, everybody. And I want everybody to, I'll look forward to 2 weeks from now and have hopefully some more updates.
Awesome. Well, thank you guys for joining us. I appreciate you being patient and understanding with the technical difficulties. I'm sure next time we'll get it all sorted out. It was a very bizarre one. That's a new one for me.
Yeah, we've never seen that. We've had other problems of me getting on because I guess technology-wise, even though I understand machine learning, it doesn't mean I understand how this studio stream thing works. So this is the first time we've lost video. So again, everybody, I'm sorry about that. I'll wear my suit next time as well.
Just to prove you're wearing it this time. Well, everyone, have a great rest of your month of January. We will see you back in a few weeks. Be safe, be healthy, and enjoy the rest of your week. And again, thanks for joining, and have a great night.
Thank you, everyone.